I went back to look at these same periods in the election years and all of this stuff, and basically the market goes bananas all the way until March. It kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in.
A huge rally is coming. Crypto prices are about to skyrocket even more than they did in 2017. That's the latest message out from Raoul Pal, the CEO of Real Vision and a veteran macro analyst. Pal has high expectations for the cryptocurrency and digital assets space. Recently, he predicted that the 2024 to 2025 crypto bull market will resemble the intense 2016 to 2017 blow-off top cycle, rather than the more limited bull run of 2021. A blow-off top refers to a rapid and dramatic increase in crypto asset prices, marked by extreme market euphoria, heavy speculation, and high risk-taking among investors. The 2017 cryptocurrency bull run is often cited as a classic blow-off top, with Bitcoin's price surging from around $1,000 at the start of the year to nearly $20,000 by December, a remarkable 20-fold increase. Other cryptocurrencies also saw similar explosive growth, pushing the total market cap of cryptocurrencies to unprecedented levels. In contrast, the 2021 bull run was stunted, experiencing price gains and market excitement, but hampered by factors like China's mining ban, US regulatory pressures, and environmental concerns surrounding Bitcoin mining. These issues led to price corrections and fluctuations that muted the cycle's full potential. Many of these barriers have since eased, with experts noting China's evolving stance on cryptocurrency and the US recently electing its first pro-crypto president. In a recent discussion, Pal shared his expectations for the current bull market, explaining why he believes this cycle will be a blow-off top, unlike 2021's stunted run. Make sure to stick around until the end of the video as Raoul Pal shares his predictions for this bull market and why he expects a major blow-off top. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Raoul Pal with his latest outlook.
Yeah, I mean, look, seasonally it happens. Almost whoever wins the election, using the everything code cycle, we're in the peak kind of debt refi cycle, so you need liquidity to come in. I actually did the maths in Global Macro Investor over the weekend. China's added $8 trillion of liquidity via both state sector and via M2. I mean, people don't realize. So liquidity is back. Everything was in place. And then we've got this other thing, which we'll talk about how the cycle plays out, but we've taken the big overhang off, which is like who's allowed to do what. And, that is a big deal. And there has to be a re-rating, not just on liquidity, but a potential re-rating of the sector. So it's a big deal.
How long do you think it takes for that to show through in markets? Is there a lag time?
Well, I don't know, because, traditional markets, they tend to sort of forward price it as soon as it gets the news. Then you get, a corrective period. But because the flows won't come until the new year, right? And we don't even have a new government in. So really the flows don't come until later because you actually need to see the regulators. It's not like Goldman Sachs can go, oh, great, Trump's in. We're all free to do what we want. They won't. They will have to wait until we're given new regulation, etc. So it kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in. Every time we get to this point in the cycle, Bitcoin dominance collapses. Risk-taking, and now with the new government, risk-taking is going to be rising. Also, the other thing that I found the main driver of alts versus Bitcoin, so i.e. the inverse of dominance, is actually driven by the ISM survey. business cycle. Makes sense, because if the business cycle starts going more positive, because it's been very lackluster, what we tend to find is that risk-taking increases because people's disposable income goes up, their businesses earn a bit more money, everybody feels a little bit better. And that drives the same as small caps versus large cap outperformance. It's basically the same trade. You see it in credit markets as well. It's all the same trade. So it's perfectly set up for that now. All of our forward-looking indicators suggest that the ISM from here starts climbing above 50. 50 is the really big signal for the alt season. Also, if we go back to 2020, it was exactly this time that ETH started properly outperforming. It's again the same point in the cycle. And if you play through, and I wrote a thread on this yesterday, is ETH is where institutions will build, whether it's on layer ones or layer twos, but that's where DeFi is. That's where institutions are not going to get fired for. It's the kind of Microsoft of the space. So I do think as regulation frees up, ETH is going to get a lot more activity than people yet understand. So I think it's a good thing. And they've built it for scale. But the layer twos, if there's not much activity going on, then the price doesn't do well. But if you can start bringing the financial institutions onto this space, ETH is the most likely candidate for it at scale.
First, Bitcoin's price takes off, sparking a chain reaction in the cryptocurrency market. Altcoin season follows, where other digital currencies experience huge gains. And soon, meme coins jump into a frenzy, creating a surge of excitement across the crypto world. Bitcoin has already hit record highs this week, but it's altcoins like Solana, Cardano, Avalanche, and Sui that are truly stealing the spotlight with their impressive gains. Cardano is up over 80% this week alone, while Sui has risen by 60%. Raoul Pal, CEO of Real Vision, believes meme coins are next, with Dogecoin leading the pack. Pal's recent tweet gives a glimpse of his forecast. We are very close to being in the last chance to add zone-in crypto. The next step should be the memes breaking out, and after that, there is nothing to do but wait to take lifestyle chips off the table. He's optimistic, but also cautions traders to stay disciplined. Many memes will absolutely explode in this cycle. I'm not a meme trader and have little alpha here, but please don't go over your ski tips in meme risk. Less than 10% of your portfolio. I don't want you to mess this up. And it's not just cryptocurrencies that are booming. Crypto-related stocks like Coinbase and MicroStrategy are drawing intense interest, with trading volumes reaching levels rarely seen. Bloomberg analyst Eric Balchunas noted that Coinbase and MicroStrategy ranked among the top 5 most traded stocks this week, alongside giants like Tesla and Nvidia, and both surged an incredible 18% in a single day. This shows that the excitement surrounding crypto is spilling over into the stock market too. Now let's return to Pal's conversation with Mando and OSF as they discuss why this bull market is likely to be so intense and how long it might last.
I put Coinbase as a trade idea. I mean, it's already been it's up 240% in our GMI portfolio and our Macro Insiders portfolio, but I put it on the Real Vision platform yesterday or day before yesterday because it's so fucking obvious. Yeah. Right? It's the toll keeper to all activity for anybody in the largest economy in the world. If you just scroll down, Arthur, there, just show the chart. The chart is, I know, Ove, you're not a chart guy, but that's a fucking gigantic invert head and shoulders. This is going to La La Land squared.
Yeah, I agree. This is the thing that I am bullish on ETH as an ecosystem. What I found difficult is just that ETH itself, just because of the changes that were made earlier this year, just like you need massive scale for that burn to come back. Whereas Coinbase, you're going to see every major US institution pick Coinbase as either a custody partner or to tokenize on base.
They're somewhere between BlackRock and JP Morgan. That's the position of power they have in this new emerging economy. I mean, what a position to be in. So it's currently a $66 billion market cap. I think this bull market, the whole space will end up being 10 to 15 trillion, somewhere between that. So how much is Coinbase worth in that? I mean, it would not surprise me if Coinbase was worth $500 billion.
Yeah. That's crazy. That's $66 billion.
It's insane. It's so cheap.
Mental, isn't it? Yeah.
Yeah. Considering the size of the market that's already there, it's a $2.5 trillion market now. So if the market goes 5x, this probably goes 10x.
Yeah.
So feels, but that doesn't sound stupid. So, I mean, that's a hell of a trade for people. If people don't want to trade the cryptocurrencies themselves, I went back to look at these same periods in the election years and all of this stuff, and basically, the market goes bananas all the way until March, and then somewhere March, April, there's tax season, and everyone's going to have to pay Uncle Sam and Her Majesty or His Majesty, and they have to start selling a bunch of stuff. That seems to happen every time where you get a pullback, and then it's going to depend on global liquidity. If it's still strong, then we end up with a strong pump into the end of the year. If not, we kind of get something more like last time. But yeah, I mean, I'm just thinking it's banana zone all the way through till March.
Pal forecasts the banana zone to stretch through March, peaking with tax season, before a quick cool down and then another surge. However, he also reminds everyone to stay smart and make the most of this opportunity without getting too reckless. In a tweet, he says, "The banana zone is that crucial phase where numbers go up, and the best move is often to do nothing if you've already made your core allocations. Bitcoin, Ethereum, Solana, you're set. Got a bit more appetite for risk? Sure, play around with newer chains like Sui. Full disclosure, I'm part of the board, or even some meme coins. But here's the key. Keep 90% of your stack in solid, top-tier assets. That's your safety net. The real danger? Overtrading, chasing breakouts, or using leverage. This is where portfolios implode. We have one job: to protect our coins. Don't get reckless in DeFi, don't hand over your assets, and save that speculative energy for the 10%. Feed your inner degen, but do it smartly." Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.